So good morning. We're going to focus on findings and corrective action plans during this presentation. We're going to go over a few changes to the audit process, changes to the corrective action plans, and discuss common repeat findings that we're seeing across the state. As some of you have noticed, we have made some changes in our auditing procedures aside from the remote auditing that we're all doing now. We now have a financial audit team and a federal audit team. As you can guess, the financial team will be in auditing your financial statements and be testing for state and local compliance, while the federal team will be auditing the CIFA and major programs. And just as a reminder, to qualify as a single audit, there would be, you would need to have $750,000 in federal expenditures within the audit period. So while the goal is to have the teams together at the same time, there are obstacles such as COVID-19 that can sometimes make that not a possibility. If your county is lucky enough, wink, wink, to receive a federal audit, we have also made a change with the reports that are issued. There is now a federal compliance audit report, which includes internal control over financial reporting, major programs, and the CIFA. And we have a financial audit report, which would include a supplemental compliance report if any findings are included. So we basically took the one report and pulled out all the federal sections of that to create its own separate report. So now let's kind of look at some of the finding types. So findings, there are a few different types of findings. If a federal audit has a Section 2 or a Section 3 finding, these are reported within the federal compliance audit report. These findings are on noncompliance and internal control deficiencies. The difference between the Section 2 and Section 3 are as noted above. Section 2 are noncompliance and internal control deficiencies related to the financial statements. An example of this would be some material difference found on the CIFA. Section 3, they are noncompliance and internal control deficiencies. Wow, that word is hard to say.
Always one.
Right? Related to the major program that was audited. So an example would be if 4D was audited or the highway construction and planning. So those are the two kinds of findings that you're going to find in the federal compliance audit report. If a financial audit has audit results and comment findings, these are going to be reported in the supplemental compliance report. The audit results and comments are significant noncompliance with statute or SBOA uniform compliance guidelines. These ARCs, as we like to call them, are required for significant and impactful noncompliance. Examples of that would be maybe there's the auditor and treasurer aren't reconciled. I'd also like to mention there are a couple other findings I'm sure that you've heard mentioned before. The first one's a management letter. This finding is not significant noncompliance with statute or SBOA uniform compliance guidelines, but is needed to be disclosed to the governing bodies. Examples could be like overdrawn funds that maybe are above, below materiality, but above trivial. So it is given to the board at the exit, and it is not part of the public report. The second is discussion only. These are findings that are in material compliance with statute or SBOA uniform compliance guidelines. We did a claims test, you didn't sign a claim. This is something that we only discuss with the official involved, and it is not disclosed to the board or part of the public report. It is worth mentioning that all findings are required to be reviewed during the next audit, looking for resolution. Items that are not resolved or are working towards a goal to be resolved could be escalated to another level in the next audit. Okay, so now we've talked about the different types. Now that we've discussed the different types, let's start discussing corrective action plans. For the federal audits and the federal compliance audit report that's issued, it will include all the Section 2 and Section 3 findings along with a corrective action plan for each of those findings. So the corrective action plans that you're doing for your Section 2 and Section 3 will be a part of this report. When the federal compliance audit report and the financial audit report were one report, those Section 2 and Section 3 findings were also included in the supplemental compliance report. This is the main change. They will no longer be in the supplemental compliance report with the ARCs, which meant that sometimes you guys were doing 2 corrective action plans for these. You were doing one that went into the report and you were doing one that was uploaded to the state, okay? You will now only complete the one corrective action plan that will go into the federal compliance audit report. All right, so just to clarify, every Section 2 and or Section 3 finding are required to have corrective action plans. The corrective action plan template will be given with instructions during the audit. This template should be completed and submitted to the field examiner in Word, if at all possible, and prior to the exit conference with the federal team. These corrective action plans are not submitted through the SBOA website. So now let's switch gears to the financial audit. All right, so for financial audit, a financial audit report, and this could be federal or non-federal, and it's always noted in the title. So if it's a federal audit, it will say a federal financial audit report or a non-federal financial audit report. If there are audit results and comments, then a supplemental compliance report will be issued and should be read in conjunction with the financial audit report. The supplemental compliance report includes all audit results and comments and any official responses that the county would want to include. This is completely optional and is not mandatory. All right. So corrective action plans for financial audits. Here's where the repeat comments come in that you're also fond of. So only repeat comments require one of these corrective action plans. Repeat is the key word here, because if the comment has appeared in a prior report, if the comment has not appeared in a prior report, it does not require a corrective action plan. Repeat comments should be noted in the ARC above. And it should say repeated in prior report or reports, and then include the report numbers. At the exit, the Form 4 will be presented for signatures after the field examiner or audit manager discuss the findings, and they will tell you which are repeat and require corrective action plans. You should be receiving a copy of this form because it outlines the requirements for the corrective action plans, and it references which ARCs require one. These corrective action plans are then submitted through the SBOA website. So, again, the Form 4 instructions that you'll receive at the exit include the website where the corrective action plan, or CAP as we like to call it, is submitted. The website's included here on the slide. This link will take you to the web page, which not only includes the form to fill out, but the instructions, template, and the 1031 guidelines. Right here, I've included a screenshot of the template. This allows you to get all the information you need at once and get it together, because once you start entering information on the form, it will not allow you to save it and come back and redo it later, okay? So This template allows you to get everything that you need and then to enter it once, and then you can submit it, and it will be sent to us. Well, not us. Us, just not Lori and I. There are 10 calendar days after the exit to submit the CAP, and the county has 6 months from the submission to implement. Now, our communications officer is willing to work with the completion, and 30-day extensions can be requested. We're also aware that some of the corrective action plans cannot be corrected within 6 months. And so in these cases, just stay in contact, with the communications officer, emailing cap@sboa.in.gov. That email address is also included on this website. You can also, if you're struggling with your CAP a little bit and just getting ideas of how to fix it, Lori and I will be more than happy to discuss that with you. Give us a call. We've got lots of ideas that we can, try and lead you to the right path.
Especially this about internal control.
Okay. So, while discussing the types of findings and corrective action plans are fun, I thought it might be good to see some real examples of repeat findings that we are currently seeing. I have removed any reference to the county, and I have combined some that were very similar. And so hopefully we have time to get through most of these. Probably not. We'll get through some. We'll get through some. All right. It's always nice to kind of see what's actually out there. So here's one on the annual financial report. The county did not have a proper system of internal controls in place over financial transactions and reporting to prevent or detect and correct errors. Due to the lack of controls over the input of financial information entered into the gateway for government units, financial reporting system, which was the source of the annual financial report, or AFR from here on out, and the financial statement, material errors remained undetected. In this case, departmental financial activities such as the sheriff, clerk, after settlement collections were not reported, resulting in an understatement of beginning cash balance, receipts, disbursements, and ending cash. So, we understand that these are amounts that are not maintained on the auditor's ledger, but they are required to be a part of the financial statements. So when filling in the AFR, a lot of times just verifying that beginning balance from the prior year will help you remember that you have those extra funds that you need to pick up from those departments. Again, internal controls, well, they're also a part of this comment. If there had been effective internal controls in place, the departmental financial activity would have been identified as missing. So, of course, everyone likes talking about internal controls, as much as Lori and I do. I'm sure. In this case, they need to reevaluate their procedures and determine where that breakdown occurred. Is it that there's only one person involved, one person from start to finish? Is there one employee that's heavily relied on, and so we think, we don't have to review that. They never make a mistake. I never make them, right? So, is there an issue? Maybe in inputting. Maybe it needs an extra review. Obviously, these are just a few things, but there are several things that could happen that could cause this non-compliance. So this one is very similar to the previous one. The first paragraph is almost a repeat. But this one is really based on funds being omitted from the AFR or incorrectly stated on the AFR, resulting in an over or an understatement of beginning cash balances, receipts, disbursements, and ending cash balance. These are the comments that we've been seeing the most. When I went and started compiling it, these were the number one. So we really just suggest that everyone reevaluates every year the procedures in place and the internal controls that would prevent and detect to correct these errors. is Lori's favorite topic, so if you ever have a drain
Next to
question,
internal controls.
call Lori. She loves drains. All right, so these is a condition of records. It's on the drainage funds. Financial records of the drainage maintenance funds were incomplete for 2018. The subsidiary ledgers did not agree to the control account for drainage maintenance, resulting in an understatement of $187,668. The subsidiary ledger has not agreed with the control account since 2013. This was due to the county not properly recording all receipts to and disbursements from the individual drain subsidiary accounts. In 2017, the county created an unaccounted drain maintenance drain subsidiary account with a balance of $187,668 in place of reconciling the individual subsidiaries. All right, so obviously this is a reconciling issue. The subsidiary ledgers were not reconciled to the general ledger. So this is really a prime example of why reconciling is so important. So for drains, and again, just basic thing, the general ledger for the general drain maintenance funds provides a record by drains of maintenance funds collected and expended in the maintenance of drains and the repayment to the general drain improvement fund of money dispersed from the general drain improvement fund for maintenance. 10 times fast. So that would be your general ledger. You should have two subsidiary ledgers, one ledger kept for each drain on which the assessment for annual maintenance has been made, and a ledger for each drain in which expense for maintenance has been paid from the general drain improvement fund, this being the purpose for showing the sum of the maintenance funds for each drain owns to general drain improvement fund. Basically in this, every receipt and every disbursement that you post in the general ledger must be posted to the appropriate account in the subsidiary ledger. Okay. All right. Let's talk about tax sale surplus. This is another condition of records. This has to do with the detailed supporting documentation presented for audit for the activity of the tax sale surplus fund. It's not an agreement with the cash balance reported for the fund on the financial statement. All right, so again, this has to do with reconciling a subsidiary ledger, this time tax sale surplus, to the general ledger fund. Internal controls play a part here too. There should be policies and procedures in place to verify that the proper reconcilements are taking place. All right, so fund sources and uses. This is a comment that we've actually seen quite a bit of as well. It doesn't come close to the AFR, but this is the local income tax. So all counties were required to adjust their funds to account for the local income tax, or LIT, as you all know, at the end of 2017. The Cowett County Distributive Shares Fund was required to be transferred to the general fund, but this county incorrectly transferred the balance to the LIT Property Tax Relief Fund. The CEDIT Special Legislation Fund was required to be transferred to the LIT Special Purpose Fund, but the county incorrectly transferred the balance to the LIT Property Tax Relief Fund. All right, so Cowett, CEDIT, CAGIT are no longer, and the correct funds really need to be used. We have noticed that some of these funds are also still available for use within Gateway. Lori and I are working to get these removed in the upcoming years. Now, I say years because we have noticed that there are a few funds that numerous counties are using. And Lori and I are going to be reaching out to provide some training to get these resolved. So saying that, if you have a chance to determine if you have funds on your ledger that are not included in the chart of accounts, getting those corrected will go a long way. All right, if you are unsure about a fund, Lori and I will be happy to work with you. These, we're going to be making some changes. Lori's going to go over that here this afternoon a little bit with some of these funds in Gateway, but we're not going to make all these changes. We're going to work with you so that we can get all of those records, currently in line with our chart of accounts. I'm going to start going a little bit faster.
You got 8 minutes.
I know. So this one is about accounts payable. We got a few, it's really more about the vouchers and how they're filled out, or in this case, they had put the vouchers together, they had done some pre-approvals, they had the ordinance in place, they filled out the claims, they ran them through the commissioners for signatures, and that's it. They never presented any of those claims at a public meeting. Okay. All right. This one kind of goes back to the AFR. This one is completely on the internal control. I know that you have heard this before, and so, we're going to tell you again that, internal controls are really, really important. In this case, it was really a segregation of duties that occurred. All right, so if only one person is involved in the AFR from start to finish, prepares it, submits it, then there is no segregation of duties. There are no internal controls. An internal control cannot just have one person. All right. This is the certification of the internal control standards. So here's where the county failed to provide and document training to personnel over the internal control standards adopted as required by the Indiana Code 511-127. Personnel includes all Board of County Commissioner members, county auditor, county treasurer, etc. The county certified on the Indiana's Gateway for Government Units financial reporting system for both 2017 and 18 that they had provided employees with internal control training. So this one, again, is still pretty common, though it does seem to be getting better. Every year, personnel needs to be assessed to determine if they require internal control training. All training should be documented and retained for audit purposes. Sometimes only for the same thing. So here's another one that we've seen a lot of. We get a lot of phone calls on this one as well. So it's approval for an alternative. The county did not use the prescribed form 127CE certificate of error, nor have they requested approval for an alternate form in lieu of the prescribed form. The Indiana State Board of Accounts was responsible for prescribing and approving accounting forms and records for all governmental units. So our approval of alternate forms has been updated in the past few years. So we tell you, please go see Chapter 1 of the Accounting and Uniform Compliance Guidelines Manual. And the very, very, very abbreviated version, if it is desirable to use a form other than a prescribed form that is not an exact replica, the new form must be approved. For any form that is to be improved, you can start using the form as you have it ready. There's a log that you have to maintain, and then you'll present that log to the examiner at the time of the audit, all right? The details in the log and all that stuff that you need to have for this are in that Chapter 1 manual. You don't need to send it up here to us. You just follow these steps, and then it can be approved on site during your audit. But don't forget, Chapter 1, nitty-gritty details, Chapter 1. So I went ahead and put this resource page in here. You know, we're not specifically talking about internal controls as a whole, but they always play a part in pretty much every conference I think we do. I think they're mentioned at least once, maybe twice. They can be a little much sometimes, but we want to provide you with an excellent reference to help you design and implement your controls for the county. Here is the direct link to the manual on the website, or if you go to the auditor's page and scroll down to manual and bulletins, it is listed right there along with the other manuals, the IT manual, all of them are right there together. All right, so here's our contact information. I hope you guys enjoyed the way I stuck internal controls in there just a little bit. I'm sure you're all very, very impressed. I love my little people I found for this slide. I just think they're cute.
Look a lot better than I do.
Right? Like that waist.
Yeah.
And with that, is there any questions or anything that came in?
Nothing has come in on that.
Okay.
Oh, they asked for a list of prescribed forms. They are in the auditor's manual.
Yes, they are.